StockPulse.com on location here at the second annual StockPulse Silver Symposium. Joined today by Jeffrey Christian of the CPM Group. And Jeff, I always appreciate you making the trip over here, a long way from New York, but can really have a silver show without CPM Group, so appreciate your team coming.
I appreciate the invitation to come and the opportunity to come to Spokane or Coeur d'Alene. It's a great area.
Yeah, a lot of silver around here. So I guess let's pull back here and let's maybe run through the vibe of the show here. And obviously tough economic conditions here if you're a silver enthusiast, but that could come with opportunity. But I don't know, I guess you're going to tell the crowd here what you think of silver.
You know, our expectations pretty much what it has been, which was that, you know, we expected the price to be weak during the summertime, July, August, maybe into September. But that we think that beyond September, the silver price probably starts rising modestly. It still has a lot of headwinds, strong dollar, rising interest rates, relatively good economic conditions. But, you know, going forward 2 or 3 years, we still expect the silver price to rise sharply at some point, simply because we think that the economic and political environment will become much more hostile than it is now.
What kind of surprises would maybe change your mind, or are you pretty much set in your prediction there? Is there anything economically that could happen that could trigger?
Oh no, we watch everything every day, you know, and one of the things that we're watching right now is the upcoming Chinese Communist Party Congress, because I think that you could see some interesting developments in the Chinese domestic political environment in the fourth quarter of this year, and that could actually lead to some weakness in investment demand and prices for gold and silver, because I think that you could see some de-escalation of the Chinese tensions between China and the United States and China and the rest of the world. So that's one of the surprises that we're watching out for. But a lot of things are sort of running along the train tracks that we thought they would run. So, you know, interest rates are doing pretty much what we thought. When Jerome Powell gave his speech last Friday, he basically reinforced everything that we had been saying that we thought he would say. So we're kind of, on that track. Obviously, domestic U.S. politics, the whole issues with what's going on with Trump and with the Republican Party, I think that could throw a surprise to a lot of people. First week in November and beyond.
Yeah. So I guess building on that demand side, I've talked to a lot of people here, and they say that there's not enough silver. Not enough silver. Gettable silver, I guess, out of the ground here. So you've got maybe some supply shortages. Chen Lin talks about silver demand increasing via the chips in China. That's all calculated into your formula, I would imagine.
Yeah. We have a much more modest view of silver fabrication demand and investment demand. And we also have a more modest view of the future for silver mining. The reality is there's a lot of silver out there. You see this at your conference here, at your symposium. There are some really interesting companies. And one of the things you see this not only at the Silver Symposium, but you see it at other mining conferences. You have a lot of very interesting mining companies with very interesting properties, some of which have high-grade deposits that they want to develop into mines. And then you have the talking heads saying, hey, there's no high-grade deposits left, there's no mineable gold left, silver left, and that's just not true. And the mining companies here lay bare the errors of that thinking. So there's a lot of silver that can be mined and will be mined in the future. We do think that silver mine production is peaking this year, next year, and will come off, but we think that the decline is going to be very modest. It's not because the world's running out of mineable silver, it's because of human-made obstacles to mining, to developing those mines. Specifically, sufficient capital, sufficient mining equipment, and sufficient mining talent, from geologists to mining engineers to guys who can work at the rock face. There's going to be shortages of those things, which could restrict the speed at which new mines are developed.
There's a lot of ways to invest in silver, Jeff. What would you, I guess, talk about a few of them here? Obviously, you just talked about the minings, the junior miners, I guess, the supply chain. Obviously, you can buy some bullion. what would Jeff Christian say to how to invest in silver the proper way?
I like a diversified portfolio within a diversified portfolio. So, if I look at my own investments, or what I tell people, I have bullion. I will trade futures and options, mostly options, on a short-term opportunistic basis. But I do have that bullion as an insurance policy as well as a capital appreciation play. And then I have stock in various silver mining companies. I have stock in companies that are producing profitably and that will have a cost profile that even in my worst case scenario for future silver prices, they'll still be profitable. And then I have some of the junior exploration and pre-development companies that I find the management and the properties attractive, that I think that they will probably appreciate of time. So I look at silver and I say, I want a diversified portfolio. I want the bullion, mostly coins, but I also want options for short-term opportunistic trading, and then I want some mining companies.
Explain the phenomenon to me of a $14 clip on a Silver Eagle.
That has to do with the shortage of blanks, and that's really what it is, and there are all kinds of conspiracy theories and weird concepts and stuff. But at the end of the day, what it really comes down to is a shortage of blanks. The U.S. Mint has the most stringent quality controls and specifications of coins in the world. And there are a lot of other mints that make blanks for other mints that they can't live up to the U.S. Mint specifications. And there have been some significant issues with the blank manufacturers for a couple years now that have severely restricted the flow of blanks that meet the mint's quality. And that's really what it comes down to.
So we have a quality control problem versus a physical shortage.
Yeah.
For those who couldn't make it out here, see your talks, of course, on the internet here as we release them. But give us a little synopsis of what you were talking about here at the conference.
Well, we talked, my main talk was what I call the real silver market. And I talked about mine production, investment demand, fabrication demand, gave out what we think are realistic views as to where it's going, talked about our price expectations, and I also talked a fair bit about the amount of silver inventories and the COMEX issues. And I pointed out that if you look at it, when the price of silver went from $5 to $50 in 1979, 1980, inventories were flat. When when inventories fell 250 million ounces in the early 1990s, prices were flat at $3.50 to $5 an ounce. So you had this enormous decline in COMEX inventories in the 90s, and it had nothing to do with the price. But if you look at the period of time when silver prices went from $5 to $50 from 2005 to 2011, inventories were rising sharply. So one of the points that we've made is, if you are a silver investor and you're listening to these guys who say the silver price is going to rise because market inventories are falling, that's not what history tells you. History tells you that the price of silver rises when inventories are rising. So, you should be worried if you see the inventories falling, because they fell a lot more back in the 90s when the price spent 15 years trading between $3.50 and $5.50. Yeah. So we talked about that. Then we had the Tuesday night event where we talked about the evidence for and against silver conspiracy theories. And that was very, very interesting, long 2-hour discussion.
Yeah, got quite a bit of that myself. I guess, Jeff, there's a lot of needing a guru, I guess, in this atmosphere here. So talk a little about the CPM Group.
Well, CPM Group has been doing research on silver really since the 1970s. I haven't, and it wasn't CPM Group. It was the J. Aaron Research Department. And it was unique in that J. Aaron was a commodities trading company that had a fundamental research department. Because the silver market and the gold market and platinum markets, they're very secretive. So J. Aaron went to the trouble. It was the only company with Handy and Harman back in the 70s that would go around the world and come up with estimates of how much is being mined, how much is being recovered by secondary supply, how much is in inventories, how much is being used by industrial fabricators, and how much is being bought by investors. And I took over the department in 1980. We merged into Goldman Sachs in 81. I spun off the Commodities Research Department in 1986 and set up CPM Group. We do the fundamental research, and then we analyze the market and we come up with projections. And our projections go from 1 week to 10 years for silver and gold. We're taking our platinum projections and our high purity manganese projections out to 2050 because of the long lead time and the transition for vehicle propulsion technologies. And we provide that research, the basic data, the analysis, and the projections to a range of people. Most of our clients are investors, institutional investors, high net worth individuals, family offices, or companies that supply our research to retail investors.
Yeah, and I know you work with some conglomerate companies as well, so yeah, talk about those guys.
Well, we work with major mining companies, we work with a lot of junior mining companies, and we'll provide them our research and our analysis. The corporate development people want to know what our 10-year projections are under different economic and political scenarios. The Treasury will want to know our shorter term views. We may help them with hedging strategies, especially we provide gold and silver hedging strategies to copper, lead, and zinc miners, and we provide copper, lead, and zinc hedging strategies to gold and silver miners. But we also do things like prepaid forwards for project financing purposes and other materials management. And then sometimes our investment clients will say, we want you to actually manage some of our assets rather than just take our advice and do the management ourselves. So we have a full range of, let's start with the research. And because we come out of J. Ayer and Goldman Sachs, we understand the financial aspects of commodity markets. We have a full range of research, and then we apply that research into financial management of people and corporations' financial exposure to commodities.
If we had an office pool and we're sitting here a year from now doing this same interview, what's the price of silver?
Price of silver a year from now, I'm going to guess is probably going to be in the range of, say, $25 to $28 an ounce, headed higher.
Very healthy for a lot of these companies in here. They can certainly
Very
survive
healthy.
there. So, Jeffrey Christian, CPM Group, appreciate you making the trip down to Spokane.
I appreciate having the opportunity to make the trip.